Hello everyone, welcome to CommerceNet Scholars. Today's video will be including the remaining 8 types of fire insurance policy. In my previous video, we have already discussed about the first 8 types of fire insurance policy. Remaining we'll be discussing today. So let's start with the video without wasting any time. But before I start, again a reminder for you all, don't forget to subscribe the channel if you haven't subscribed yet. Watch it till the end, do give it a like if you really like the video, and share it with your friends as much as possible. Let's start with today's topic, that is the different types of fire insurance policy. Talking about the first type, we have as sprinkler leakage policy. Now what sprinkler leakage policy is, sometimes it happens that accidentally the water starts leaking from the automatic sprinklers that are installed in your organization for the purpose of extinguishing the fire in case of fire insurance. Now when that happens, there can be a number of goods, there can be a number of assets, or there can be certain losses that you can occur due to this leakage. In that case, to prevent the building and the assets from this particular damage, the fire insurance policy is going to provide you with this particular type of policy, which is referred to as the sprinkler leakage policy. Now whatever losses you have due to this leakage problem of the sprinklers installed in the organization, insurance company is going to pay you compensation against this, is going to protect you, indemnify you in that regard. Proceeding further, the 10th type that we have is the consequential loss policy. Now what consequential loss policy was, I have already briefed you in the previous videos. Whenever, say for example, I had given you the example of the bakery outlet, that in case an incident of fire happens in a bakery outlet, what will happen for that particular time, the goods will be destroyed, the outlet would be destroyed, the showroom would be destroyed. That is one particular situation. But again, for a number of days, for a number of months, might be possible that it would take a lot of time to make the place suitable again for manufacturing the bakery products in the same manner. So that this is what referred to as the consequential loss. Like ki whatever losses you are incurring due to the incident of fire, apart from that, whatever losses you will be incurring due to the hampering of the production activities will be covered under the consequential loss policies until and unless the business is restarted. Proceeding further, the next is transit policy. The goods and whatever goods are transferred through the road or railway route, what happens, they somewhere have that risk of getting destroyed on their way. So whenever the goods are on their way through road or through railways, the insurance company is going to provide you, is going to protect you under the transit policy, which will be protecting your goods from the incident of fire when they are on their way through roadways or railways. Next we have is building in course of construction policy. It happens that the buildings are being constructed and there is there can be some factors due to which the construction process is hampered, or whatever construction was done till now totally gets destroyed. So in that condition, the insurance company provides you building in course of construction policy, which is going to prevent the buildings that are in the process of being constructed and are protected against the losses that are going to incur due to the losses of fire in the buildings that are being constructed. Next that we have is the declaration policy. Declaration policy is what? Whenever we are talking about the stocks that are belonging to the wholesalers, distributors or etc., it's but obvious that they will be subject to certain fluctuations in their value and volume. If you remember, we had discussed the policy, floating policy. So it is somewhere like that. In this situation, what happens, floating policy mein we had an assumption that this is the rough estimate for which we have the value of goods with us and we are taking the policy in this. But in declaration policy, what happens, the stockholders or the wholesalers or distributors, whoever is taking the policy, needs to declare a value of the policy under which it will be referred to as the declaration policy, and there are certain features under which the premium is paid. Provisional premium on 75% of sum insured is paid. So whatever is the sum insured, you will be having to pay a premium of 75% for that. Insured has to declare the value of stock periodically, usually monthly. Provisional premium is then adjusted accordingly. If no declaration value is made, then sum assured will be deemed to the declared value. So whatever value of the stock is there, whatever value of the goods is there, that needs to be declared on a monthly basis, and whatever premium is there, it will be adjusted accordingly. Else the insured, whatever sum insured is there, it will be declared as per the value already declared by the owner. Next we have is the maximum value with discount policy. Under such a policy, the insurance is taken for the maximum amount of stock of the year and the full premium is paid. What happens? Initially you are going to take a policy for the maximum amount of stock that you will be requiring in a year, and you will be taking the policy against it. You will be paying the full premium upon the estimated maximum amount of stock. At the end of the policy term, 1/3 of the premium is refunded in the form of discount to the insured in consideration of variations in the value of goods. As I told you, like when we are dealing in on a large business scale, the value of the goods are going to fluctuate. So initially what we are doing under this policy, we are declaring a maximum value for our stocks and we are getting the policy. At the end of the year, 1/3 of that premium, whatever we have paid, say for example we have paid 3 lakh as the amount of premium in a year, although I'm taking it too high, but let's just have an example. So in that case, 1/3 of the premium, that is 1 lakh, will be refunded to you, and the remaining 2 lakh will be considered as the premium. Next we have the blanket policy. What is a blanket used for? To cover yourself. So ultimately blanket policy will be a kind of policy which will be insuring you against more than one type of assets or the property that you will be having. So this is what it covers: more than one type of property in one location, or one or more type of property at several locations. So it will be covering all your different properties as well as all your different assets under one single insurance. You don't have to take different insurance for different properties or the different category of assets that you have in your organization. And the last is the rent policy. Quite strange name, but let's see what it is. Rent policy protects the building owners against the loss of rent. In the event that a tenant does not pay the rent because of fire, the insurance company will pay such a loss. This is some or what similar to the consequential loss policy, but since it is generally given only for the buildings only, hence we refer to as the rent policy. Consequential loss policy mein what it was, since the production process will be hampered for a certain days due to the incident of fire, so it will be covering the consequential loss. Rent policy mein what happens, the owner of the building, if there is an incident of fire in a building and that particular building was given on rent, and there was a tenant in that particular building or the flat, and an incident of fire occurs, what will happen? The tenant will be vacating the flat, and until and unless the situations are normal and sustainable enough to live in that building or flat again, there will be no tenants available. So for that particular period of time, say for example it takes around 6 months to get it renovated to make it suitable for living for the tenants. If it takes 6 months, so for that entire 6 months, whatever will be the loss of rent for the building owner will be paid by the insurance company under this policy. So this kind of policy, rent policy, is really useful for the building owners if they are providing it on the rent. So I hope it was clear to you all. Any doubts, any confusions, you can mention down in the comment section below. That's all for today. Thank you and have a nice day.